So I've been fortunate enough now in my life to start and run multiple successful e-commerce businesses. And with these businesses, although be it they're a lot of work, I've been able to make some pretty good money with them. For the last 4 or 5 years since the day that I've started them to basically now, all the money that I've earned from these businesses gets reinvested into them so they can eventually earn more profit in the future. But as these businesses have grown, especially over the last few months, we've started to make a little bit more money than usual. I've been trying to invest as much as I can back into these businesses, but at the same time, there becomes a limit to how much I can invest because there's only so much inventory that I can actually process. And that leaves me with one thing, which is money in the bank. Now most people will say, hey, that's a really good thing. You're actually starting to build some money in your bank account. Something that I really haven't been able to do for the last few years is actually build some savings because again, I've been reinvesting so heavily into these businesses. But money in the bank in the business world is usually actually not a great thing. Let me explain why. See, bank accounts have very low interest, which means that the money that you leave in those bank accounts over a set period of time is not earning you as much as it could be somewhere else. If you've read the title, I think you already know where I'm going with this. Essentially, most bank interest rates will actually pay you less than the growth rate of the economy, meaning the inflation rate is actually overtaking what you're earning in the bank, which means that technically your money sitting in the bank, in most cases, unless you have a high interest savings account, is losing money. And that's not a good thing. And this is when the stock market comes into play. I've spent a lot of years studying the stock market and trying to learn all about it. I've done multiple different simulated trading accounts, and I've also opened a few real ones. Listen, I'm no pro stock trader or investor by any means. In fact, I should really disclaim that I am not a financial advisor, and everything that I do in this video and in this video series is not recommended that you try it as well, because again, I have no idea what I'm doing. That being said though, the stock market gives us the potential to earn way more than we would conventionally just by saving money into the bank. So with that extra money from the e-commerce businesses, I'm going to be announcing a new series where I'm going to be putting that money into the stock market using WealthSimple Trade. This video is not sponsored by or affiliated with WealthSimple Trade in any way, so please don't feel obligated to use it. Use whatever you feel comfortable with if you are out there trading. I just happen to come to like their program and the way that it has no fees when trading in Canada, and yeah, overall it's just a really clean and easy program to use. So here's the objective of this series. We're going to be starting off with $100 and trying to grow it into $10,000 by the end of the year. I know it sounds a little bit ambitious, but I think it's going to be possible. Now, we're not just going to be using that initial $100 and trying to turn it into $10,000. In fact, that'd be nearly impossible. But what we're going to do is we're going to be using a couple different principles here to grow our money up to that $10,000 amount by the end of the year through a couple different methods. The first one is we're going to have an actual trading account where we literally go and we buy equities with the goal of being able to flip them within the course of the year for more money than what we initially bought them for. That's a pretty standard way of investing. By no means is it day trading, because I really feel like day trading is probably not the best way to go. We might play around with it a little bit here, but for the most part, I'm going to be looking to make some longer month-long investments towards the end of the year, possibly even carrying them into the next year and seeing what we can do there. The second principle of this investment account, which is the one that I'm most excited about, is going to be the compound interest aspect. Compound interest is essentially a principle where the interest that you earn on whatever investments you have, whether that be through yields and dividends or whatever else, that interest then gets reinvested, and then you can earn more interest on that interest that's reinvested, hence the word compound, and it sort of just creates this infinite money loop. It might sound a little bit complicated now, but if you wait through the series, I'll explain it a little bit more in depth, and I'll show you how this really works. Essentially though, if we look to buy a few different stocks with, let's say, some high yields, maybe in that 8 to 12% rate, and I'm not sure how possible that's going to be just yet, but if we can manage to snag some of those up, we're going to be looking at earning that on an annual basis, meaning that we can essentially have the price of the stock paid off in 10 years, and all that interest that we earn from those stocks can be reinvested into more of those stocks to then earn us more 8 to 12% returns, and you can see where I'm going with this. So those are the two different strategies. We're starting with $100, and my goal is to add an additional possibly $50 to $100 every week. I'm aiming to sort of somewhere between $200 to $500 a month is what I'm going to put into these accounts. We'll put them in accordingly. I'll take a lot of feedback from you guys, and we'll see what we can grow this into by the end of the year. So with that all said, the current time is 1:57 p.m. and we are starting this challenge today. The market will close, I believe, at 4 o'clock, so in about 2 hours. We don't have much time here, but my goal today is to spend the first $100 that I put into the account, and then we can get this sort of ball rolling with this account. And I'll be trying to do some weekly, if not monthly updates at least on this, and we can track the progress of it and see how much money we're going to make. I think the first order of business in this entire thing will be to head over to my computer and start doing some research into what sort of stocks I should be buying. I think this week we're going to focus on some higher yield stocks, like I mentioned on the second point there, and we're going to try to get some of these stocks that will give us some compound interest. If I see something interesting outside of that, I might try to invest, but with $100, we're not going to make a lot just trying to trade equities over the next month. We'll have to wait till we have a little bit more money to do that. Okay guys, so I'm over on my laptop now, and I found an interesting website that has some different lists of different high yield stocks in Canada that I think we can look at. So I'm starting with Canadian stocks because I don't really want to pay the exchange rate off the bat, and since we're just starting with $100 here, we haven't added any more money. I don't really want to be wasting that money away on exchange rates. Or I suppose the fees that would be taken on the exchange, also our buying power is less than the US. Let's just start in Canada to keep things simple. Looking here though, we've got some grade A stocks. I'm assuming that means that those are some of of the best ones, whether that be the performance or the stability of them, I'm not sure. Again, it's a learning process, so you guys will have to bear with me for that. If you guys know some of the answers to whatever I've said in the video, be sure to leave them down below, because I'd be loving to hear what you guys have to say about this stuff, and to obviously be able to learn from you guys. Anyway, so a couple of big companies here that we're seeing. We've got Manulife with a 5% yield. I said that was going to aim for an 8 to 12. Not sure how realistic that's going to be, especially here in Canada, but let's see what we can do. Power Corp of Canada, again, we're looking at the price here. You know, these are all sort of affordable. We could pick up like 3 shares there for 6%. Yeah, I mean, there's some interesting stuff here. Again, I'm not really sure what to go with, but let me scroll down. Okay, here we have B grade. A lot of these ones are sitting around 5. We've got 7% here though, a pipeline. I'm not sure how confident I feel with that. I'm gonna do some little research individually into these once we choose a couple that we want to look at, of course. But let me see here. Going down, I'm just sort of looking at yields right now. Enbridge at 7.85. Enbridge seems like that might be a good one. Yeah, $42. What if we picked up even just 1 or 2 of those and then maybe something cheap? Kiera Corp, I have no idea what that is, but that might be a cool one to look into. Again, a cool 8.21%. We also have to be careful because some of these yields can be adjusted throughout the year, especially right now where things are a little bit uncertain. So some of these higher ones might come down on us depending on whatever's going on in the market. So we have to be careful. Companies can adjust their yields. And so we're going to want to look back at how consistent those yields have been, you know, paying out at whatever percentage before we decide to buy one. Got some natural resources. That could be interesting. I'm not really sure. I'm going to start by looking up like Kiera. I'm going to look up this Enbridge one right here. I'm going to look up some of the highest yield ones first, see how they've been performing in the past, and see if they might be something that we're interested in purchasing. One thing to quickly note here is that we're not actually looking for the return on the actual stock price. Like, we don't care if it goes up or not necessarily, because we're just looking to get the yield back on it. So if Enbridge stayed around $45 for the next 10, 12 years or whatever, we would be fine, because as long as that yield doesn't change, if that 8% or whatever it is, then we're just going to keep getting paid the same amount. So here was our yield. It was $3.34, 7.5%, and I believe that was the last one. Yeah, I believe this is what this means. The last dividend date was February 11th. So that's interesting. I had to figure out how to see the whole history of when the last time the company paid out was, but we can see here within about the year, we've had very consistent prices. This is why I want to see the 5-year, because I want to see what happened before everything crashed in March, and we were sitting right around 53, and now we're down 42. So I mean, we're not getting a huge deal there in terms of something that might go up in value in the future, but overall, again, we can see this has just been a super consistent stock on the 5-year basis. Even Maximum coming up from whoever bought it at $3 or whatever would have been doing quite well right now, but coming up here, I mean, we're not seeing any big turmoil with this stock. It seems to be a fairly consistent one. Again, I don't know what I'm talking about, but that's just judging by this graph. It looks pretty reassuring. So $44.65 is the current going rate. That would put us right around $90 if we bought 2. Yeah, let's see, but I think we're gonna have to pick one of these up because this looks like a pretty good deal. I'm in the historical data now. I'm trying to see if there's anything here. Okay, there is something here. So they have a low dividend here on the 11th. Yeah, we're seeing 83 cents. And didn't we see on the other page here? Yeah, we're seeing it should be 334. Let me do a quick calculation on that. If we do 334 divided by 44.59 roughly, yeah, that's roughly gonna get you your 7.5%. So we're seeing an 83-cent dividend, which is not great. If I keep scrolling back, 81-cent dividend. If we keep going back here, 81-cent dividend. It seems like we've had a pretty consistent 81-cent dividend, so we have to be careful here, guys. Yeah, that's only a 1.8% return on the yield, which is not good. That's not what we were looking for. So I'm not sure about this one, guys. We'll keep it in mind. I'm gonna do some research into this Kiera Corp right now, so Key, and I'll see what we find there. Something to note here is I searched up Key, and this brought me to Key Corp, which is not what we were looking for. This is on NYSE or it's on NASDAQ, I'm not sure. Yeah, it's NASDAQ real type price. So this is actually some sort of tech stock, but that's not what we were looking for. We want the Canadian one. Here we go. Here's Kiera Corp Key.to, which is for the Toronto Stock Exchange. Let's see here. Yeah, 7.62% dividend yield. Let's go to the historical data right off the bat here and see what they've been paying out. 16 cents. 16 cents. Am I getting something wrong here, guys? Am I missing something? Okay, I'm on their website now, and sure enough, it looks like they've just been paying 16-cent dividends. Oh, but this is on the monthly basis. I am totally lost there. Oh my gosh, there's so many of you guys getting angry in the comments right now. That's on the monthly. I did not realize that. So they pay their dividends on a monthly basis, which obviously in a year equates to the 3.5 or the 7.5 percentage. Oh my gosh, I should have left that out of the video, but this is a learning curve here. So oh, I'm such a genius. Okay, so yeah, we do have that 7% dividend. Oh man, and this is an energy stock. I was just actually reading through a little bit of their site. Connecting energy for life. Okay, this one looks interesting for sure. Looking at the 5-year, guys, it looks like a pretty stable one, and this is maybe why it was rated that B grade. You know, we can see here some good growth, but then we're kind of stable around the same price, $22 stock now. So now let me do a little bit of math. 25, 50 plus 44. What if we picked up 2 stocks as Kiera Corp, because this one looks kind of cool, and then as well as Enbridge. I know I'm sort of just taking a risk here here and going for it, but I think that might be the ones to buy. Mainly because they fit in our budget, they have that high yield that we're looking for, and overall should just be really good. I should address something else here too, because I think this is kind of important. Yield stocks and things that have these sort of returns on an annual basis are usually something that you look into later in life when you're not looking to take those big capital risks. I think oftentimes, when you're younger, you're expected to take some big capital risks and try to, double or triple your money, whether that be on real estate flips or some actual stock trading. But in this case, this is sort of a longer term retirement plan for most people. However, I have been doing some math on some compound interest, and I think even on the short term, we can make some pretty good money doing it and just generally grow our portfolio without having to worry about the fluctuating prices of the equities on a daily basis. So I think this will still be a good move for us here, and we can obviously change that later up if it's not working for us. Okay, so I'm looking at Kiera Corp now in the WealthSimple app. I'm going to add it to our watch list right off the bat here, but we can see some of the more simplified information right here. There's our high yield of 7.5%. We've got market open at 26. We're buying at 25.82. So I say we just go ahead here and buy. Want $25 off your next key trade? Invite friends and earn cash. I should probably be doing that. I need to get some friends. Involves the production of oil and gas and services including refining, distribution, as well as retail and marketing of finished product. Okay, so we know these guys are involved in some oil and gas stuff, so this probably isn't going to be a super long-term great investment, but I think for right now, just to pick up a couple shares of it would not hurt us on the short term, get that 7.5% return, then move our money elsewhere if need be. Again, likely not a stock that's going to see a huge increase over the next few years, just because of the nature of what they do, but we'll just buy it and find out. So 2 shares will cost us $51.54, which should leave us enough room to buy Enbridge, so I'm just going to go ahead and do that. All right, so we just sent our order in, and sure enough, we got our market buy of 2 shares at $51.54, so we'll press done. Now we have available to trade $45.88. Is that going to be enough to get us Enbridge? Oh no. Oh, it should be. We're at $44.75. Oh no. Again, gas and oil business. I'm sorry guys who are into the environment. I would be buying some Tesla shares, but I just can't afford it. So we're going to be starting off here, but we will eventually hopefully get up into some of those more expensive stocks and be helping with the planet here. But for now, we're just going to buy into this one. I know it's like oil and gas and pipeline stuff, but it is just what it is, and hopefully we can make some money on it on the short term and change to those environmentally friendly things in the future. Okay, now our available to trade just went up by a few dollars. I wonder if that trade fulfilled on the other stock. We're just going to pick up one of these though. Okay, confirming the order there, and sure enough, order sent, market buy. No, I don't want to rate the app. Okay, it looks like we're already up 10 cents on our investment, guys. Wow, we are doing well. I should sell. I'm kidding. WealthSimple is not great for day trading because you lose majorly on the delay between when WealthSimple sends the order and what the actual price is. So now, trying to reload it here. Let's see if Enbridge entered the portfolio. Again, this is being done through my TFSA, by the way. I've got 2 accounts on here, which will be a trading account and a TFSA, and the TFSA will be for these longer term dividend stocks, and the actual trading account will be where we're doing our trades, so we can pay the taxes on those or whatever if we decide to take the money out. But I plan to leave all the money in here for now, so it shouldn't be a problem. Well, I don't think we actually bought these. We just have 2 pending orders. Oh no, I think we got them, guys. So there we go. We'll go to our 1 day. There's nothing. Okay, so there's no data there, but that's it. Okay guys, well that is going to wrap it up here for our first day of trading with the WealthSimple app. Overall, as we can see, I don't really know what I'm doing. I'm kind of an impulsive person in general, so I didn't want to waste too much time there. I think we made some good trades. I hope we made some good trades, but at the same time, after reading into that oil and gas a little more, I may have just blown my $100. Hopefully that's where you guys will come in though, because hopefully you guys can give me some advice and feedback down below in the comments section. Maybe guide me a little bit in this if you have any experience, or maybe if you just heard something wherever, I don't know. Just see if you can contribute, and maybe we can figure out what stocks to buy in the future together. Yeah, I mean, I'm happy with the yield percentages, and overall, yeah, I think this should be good. Anyway guys, this is the start of a new series on the channel here, so hopefully you guys are excited about it, and I sort of spent a little bit of extra time today explaining some different things, but we'll move a little bit quicker in the future and just sort of hopefully have a little bit more money to play with as well and buy some more interesting stocks. But that's gonna do it. This is the start again of our $0 to $10,000 series, where technically I'm adding a little bit of money in there, but hopefully we can actually see some earnings on that, so we have more than that $10,000 even if possible by the end of the year. I mean, like, it's March right now, so even if we did $500 a month, that's only $4,500, so maybe I'm a little bit ambitious, or maybe I just had to put a little bit more money in, but I think we should be able to get this account up to $10,000 by the end of the year. With that said, if you guys enjoyed this video, be sure to go down below and leave a like on it. Again, leave me some comments with some suggestions of which investments you think I should be making, and what stocks you think are hot right now, or what do you think I should be buying. Should I be doing some day trading stuff, some more longer term stuff? Let me know down below, and I'll be sure to read all the comments and see what we can do for next time. Subscribe to the channel if you're new, and I will see you guys all in the next video.